Welcome back, everyone, to another update on LabCoin. Over the past 24 hours, many viewers have pointed out that despite previous concerns about the project, LabCoin has delivered a notable short-term recovery. The token has gained approximately 12 to 13% during the last 24 hours, bringing its price back to around 1.480. Naturally, this has raised an important question for investors. Is this the beginning of a sustainable recovery, or is it simply a temporary bounce before another decline? In today's analysis, we'll examine the recent price action, the key support levels, holder behavior, the project's latest staking announcement, community sentiment, and the overall outlook for LabCoin. By the end of this video, you'll have a clear understanding of why the price has moved higher and what risks investors should continue monitoring. Let's begin with the latest market data. At the time of this analysis, LabCoin is trading near 1487, representing approximately a 13% gain over the last 24 hours. While the price has moved higher, trading volume tells a different story. Volume has actually declined by roughly 7%, indicating that despite the price increase, overall trading activity remains weaker than before. This creates an important question. Why has the price increased, even as trading volume has fallen? Looking at the chart, we can clearly see that LabCoin experienced a significant sell-off before this recent recovery. Following that decline, buyers stepped in and pushed the price higher. However, understanding whether this move represents a genuine trend reversal or simply a technical bounce requires looking at the key support area discussed previously. As mentioned in my previous analysis, the region around 11 cents has been acting as a very strong support level for LabCoin. If the price falls back toward this level and breaks below it, the downside risk could increase significantly. However, if buyers continue defending the support and the token stabilizes above it, the market could experience additional short-term upside. At the moment, there appears to be substantial buying interest around the equivalent of 10 rupees to 11 rupees, where many investors have placed buy orders. This buying activity has helped prevent a deeper decline so far. Even with today's recovery, it's important to keep the move in perspective. Compared to the token's all-time high, this rebound remains relatively small. The current move simply represents approximately a 13% increase over the past 24 hours, rather than a complete trend reversal. For investors who accumulated LabCoin around the 10 to 11 rupee range, this recovery has produced a short-term return of approximately 12 to 13%, which is certainly a positive outcome over such a short period. The larger question, however, is whether this momentum can continue. Will LabCoin continue moving higher from here, or could it eventually fall below current levels and create additional losses for investors? My overall view remains unchanged. As I have discussed multiple times previously, I continue to consider LabCoin a highly risky project. Looking at the 1-hour time frame, the dominant trend has consistently been lower, with repeated waves of selling pressure. We have seen similar behavior in other tokens before. As I previously discussed with Siren Coin, temporary rallies can occur whenever buyers briefly return to the market. Those short-term recoveries may generate quick gains, but after those rallies end, the broader downtrend often resumes. The same pattern has also been observed in projects such as Luna. Short-term pumps may occur, but unless significant new capital enters the project, sustained recoveries become extremely difficult. In the case of LabCoin, I do not believe the price can move significantly higher unless the project receives substantial new investment. Many of the larger investors who originally participated in the project have already realized their profits and rotated into other cryptocurrencies. As a result, much of the remaining buying activity now comes from smaller investors purchasing approximately $10, $20, or $50 worth of tokens. Unfortunately, buying pressure from smaller holders alone is generally not enough to support a major long-term rally. Every time smaller investors begin buying, larger holders, or whales, still have the opportunity to sell portions of their remaining positions, secure profits, and move into other projects. That selling pressure continues to limit the token's upside potential. Now, let's examine the project's latest announcement. On the official Lab account, which now has nearly 700,000 followers, the team recently promoted its staking program. At the same time, the project currently reports approximately 27,570 holders. The team's latest message encourages users to maximize their Lab staking rewards by locking their tokens for extended periods. According to the announcement, users who stake their Lab tokens can earn additional rewards, with larger benefits available for earlier participants and for users actively engaging with the Lab ecosystem. The basic concept is straightforward. If an investor owns 100 lab tokens and agrees to lock those tokens for 1 year or longer, the project offers approximately 35% additional tokens, increasing the balance from 100 tokens to approximately 135 tokens once the staking period ends. At first glance, this may appear attractive. However, the key issue is that staking increases the number of tokens held, not necessarily their future value. While one investor's tokens remain locked, other holders are still free to sell their positions. If significant selling continues throughout the locking period, the token price could decline substantially. For example, an investor may eventually receive 135 tokens. But if the token price falls dramatically during that year, the total value of those tokens could still be much lower than the original investment. Today, the price is approximately 14 cents. If, after 1 year, the price were to decline toward 14 cents, the investor would still face significant losses, despite receiving additional staking rewards. This illustrates the primary risk associated with staking a highly volatile asset. Instead of locking capital into a token with uncertain long-term price performance, some investors may prefer allocating funds to other cryptocurrencies that could potentially deliver stronger returns over the same period. For that reason, I do not believe the current staking program alone provides a complete solution to the project's challenges. Earlier in the project's development, discussions focused on burning approximately 10 million tokens. A significantly larger burn, potentially removing 70 to 80% of the circulating stake, could have a much greater impact on supply dynamics. Without a major reduction in supply, however, simply encouraging investors to lock their tokens does not fundamentally solve the underlying selling pressure. Eventually, someone will always be able to sell. Large holders still control substantial amounts of LAB coin, and there are continuing concerns that significant allocations remain concentrated among whales. According to the criticism circulating within the community, large wallets have repeatedly been able to sell into market strength while the project continues promoting positive developments.